Hey everybody, Stephen Sitkowski here. I am the founder of Sitkowski Trading Academy, as well as Market Mastery Group, where I'm the chief investment officer. And both of these organizations are really dedicated to helping you be a better trader, hopefully to be able to make money regardless of whether the market goes up, down, or sideways. That is the name of the game. We teach both equities and options. I have a trade idea. Actually, I have two of them for you, but I want to be real clear on something. I do not give investment advice on these recordings. This is educational purposes only. It's to teach you how to think about the world of trading. I know nothing about your personal situation and what is suitable for you. So wanted to make that clear. Let me show you a chart on Nvidia. This has been really a great performer now for a while. So that yellow line that you're looking at, that is a 30-day moving average. So the fact that the stock is above its 30-day, that is generally bullish. If we were to look at the trend line, we can see that we're trading above the trend line. So that is also bullish. The other indicators are pretty flat, but that's all that I need them to be. So let me show you two different ways of being able to capitalize on this. So one would be, let's look at a covered call. So we're going to go out 29 days. And let's see here. The market is closed, so sometimes the pricing gets a little funky on us and takes a little bit to be able to load. Since I've already done this, I can tell you that, let me just go ahead and reboot this, that we can pick up doing a covered call for 29 days, about $17 per share. Okay, so what does that translate into? You have there we go. We have a $350 stock. So if we go out, let's see, and sell a 350 strike, there you go. Yeah, about $17 a share. So if I take 17 and divide it by the price of the stock, 350, that's 4.8% return in 29 days if the stock does nothing. All it's got to do is stay at 350 or go higher, and in either case, you're going to make almost 5%. Okay, but let me show you another way to be able to approach this. Let's say that you felt like this stock was not going to fall below 330 in the next 29 days. And I would say that is a pretty good bet. Let's see what that trade looks like. So we'll let this load. And if I look at the midpoint, I'm looking at about, I would have to pay probably 360 to get into this trade. So the way that you calculate maximum profit, you take the difference in the two strikes. It says 330 to 325. What's the difference? $5, right? Okay. So $5 minus what you paid to get in 360, that leaves you $1.40. So let's do the math. $1.40 divided by 360. That is a 38% rate of return if the stock stays above $330 per share. And as we look at the chart, doesn't that seem likely? I mean, 330 is right there. That is what you call a really high quality trade. The probability of maximum profit on that trade is going to be in the neighborhood of 70%. So you have a 70% chance that you'll make a maximum profit, with that profit being 38% in 29 days. What if you wanted to increase your probability. Well, then we could move this down a little bit. Let's try this. You want to be really conservative? We'll see if there's any juice in this really at all. What if we went, now let's see, what if we decided, let's get rid of these. Let's get rid of this trade. Normally what I try to do is keep my probability at 75 or higher. So the way that I'm going to do that is I'm going to come out here and I'm going to make my short call 375 and my long, or 325, and I'm going to make my long call 320. Let's see what that trade looks like. We'll let the price load up. We're probably going to get filled around $4. So the spread is 5. It's going to cost us about 4 to get in, probably less than that. But let's use 4. That means we're going to make $1 a share on a $4 risk. What is that as a return? 1 divided by 4, 25%. And in this case, your probability of maximum profit goes up to 74%. How does that sound to you? So there's a couple of examples. You could sell the 330, buy the 335, pick up about 38%. You need the stock to stay above 330. 70% statistical chance that'll happen. Or sell the 325, buy the 320, make about 25%. Now you have a 74%. Or if you want to own the stock, buy it, sell a covered call against it at the money. And if the stock does nothing, pick up about 5% for the month. So again, the whole idea behind this is to continue to teach you. If you want to get more information, you are welcome to go to my website, sitkowskitradingacademy.com. And until next time, everybody have an amazing day. I hope wherever you are safe and sound. Looks like the world is coming back to order, and the market, well, the market has certainly been cooperating. So that is nice. By the way, I think this market is completely illogical. I don't think there's any way the S&P should only be down 4%, but who am I to judge? Just look at what the buyers and sellers are doing, follow their lead, and almost all the time will keep you on the right side of the trade. Okay, bye for now.